Hey, what's up, everybody? It's Stephen A. Williams, president and founder of the creditrepairshop.com. And in today's video, I'm going to talk about the 5 things that I think are so important that I wish I would have knew when I was 18 years old. That if I could go back into the past, that I would have said, these are 5 things that I wish I knew before I started establishing credit. So let's get right to it. And I believe that this is very important information, even if you are not 18 years old and starting off with your credit. What I'm going to give you here with these key things is stuff that you need to be paying attention to closely right now so you can rebuild, reestablish, and be able to move forward. Because if you do these things, I guarantee there's not too many things people can guarantee in life, but I can guarantee this because this is exactly what I've done to have rebuilt my credit to 834 across the board. So now, the first thing that I wish I would have knew, and I'm pretty sure you would probably be thinking this way too, but I'm gonna dig deeper into why it's so important, is that credit is like having a head start in the financial world and in your personal life. We know that credit is important, but when I really evaluate how much we live in a credit-driven society right now, uh, when I look at where I'm at today with my credit, and if I would have had done things back in the past, I would probably be even a lot further because, and this is the big reason, is the big reason why, is because I had to stop and start over again. Remember, if you know my story, in 1994, I had credit was destroyed. My wife and I basically were $300,000 in debt, and we had to stop and start everything all over. And it took us all the way until 1999 to fully resolve all of that. Just think, if starting it off at the age of 18 in 1988, if I wouldn't have known this information, wouldn't have never went through that, and I would have been ahead of at a faster pace moving forward in my financial future. Uh, Having excellent credit is so important for business relationships, auto financing, favors. And I wrote down favors because I remember something that happened to me after I got my credit. I think it was like 750, somewhere around there. No, take that back. This is when I first was close to breaking into the 700s. But because my score was, very close to 700, and at that time, this was, back in the like '06, '07 period, because that's what people wanted to get. That 700s was like the name of the game back at that time. And but I remember it was a Range Rover dealer. I was getting a Range Rover, and because I needed 1 point, do you know that finance company actually gave me the additional points to push me into the 2% financing group? Just think, 1% when you're financing a vehicle that a high expense vehicle, or high price vehicle. 1%, it makes a huge difference. And I see people that come to us at the credit repair shop with 6, 7, and 8% interest, and then with Santander 22% interest. By doing that one favor, and the reason why I did the favor is because they saw that I was close to the 700s. They put me into another category, and I remember because it ended up taking me to Chase Bank rather than some of these offshoot finance companies, and it was 2% for the loan, 2%. The other thing is that you're perceived a different way. Like, I just think, I went into that dealership, and I remember going into dealerships when I was younger, and at that time I was in my late 30s. It was like a whole different perception of me by having that strong credit. It's like, how people can be. They're going to judge you a certain way. First, they're going to look at you, look professional. And then, they're going to see how you talk, all that stuff. And then next thing they're going to do is they're going to look at your credit and they're going to be like, okay, this person manages their life, manages their finances. You get prime rate, you get the best rates. Also, it helps you in your personal life. Had many people sign up with our services solely because their spouse, their future spouse, fiance, said no ring, no marriage until you work out your credit, because they don't want to go into a relationship, even though it's not about money. But the number one reason why marriages fail is because of finances. Next thing is employment. Having excellent credit, having good credit is so important now for employment. Like, they're actually looking at individuals' credit reports to make decisions on either hiring or giving promotions. So it is very important. Back when I was younger, it wasn't they wasn't looking at it like they're looking at it now. But I could tell you, when I had joined the military, one thing that they did do is that they did check my credit. And I think that they really did that to see obligations that I had out there. The number two is just avoid making mistakes. Like, I know it sounds easy and, for me to just say it, but if you think about it, if you can avoid making mistakes with anything that you do in life, doesn't it make you be able to move forward a lot faster, because you don't have to fix things and then go forward? Things like late payments, people just don't know. And I had to learn this lesson too, so I'm not any better than anybody else that's watching this video. When you make a late payment, one late payment, you can have 23 months of good payments and 1 month of a late payment. And it's going to take, depending on when that happened, it could take as long as 2 years, unless you get an exception, as long as 2 years to correct that, to have that wipe away and be taken over by your other payments. You don't have to take my word on it. Look at your credit reports and you'll see that it has 24 months of payment history on there. And if you mess up on one of those months, you're going to get hurt on there as if you did something detrimental, like you refused to pay when it was just a late payment, but they hurt you. How can I say this? If you have not made many mistakes, any mistakes that you make on your credit will hurt you as if you've made a lot of mistakes. I don't know if that's just the way the algorithm is written, but if you could have perfect credit across the board, you make one mistake and have them report a late payment across the board with all three bureaus, you will see a drop in your score and you'll be like, man, this is just like I just refused to pay. So don't make that mistake. Another mistake that I see people make, and I made this mistake, is having too much debt. I see a lot of videos here on YouTube where they're telling people to get credit cards, this and that, to do all that stuff, but I rarely hear people talk about how people are going to pay that money back. And remember, the reason why a lot of people have issues with their credit is because they had too much debt. So what I would tell myself, my 18-year-old self, is be very careful about the debt that you get. Make sure that you can manage that debt, and you're not trying to manage debt by saying you can manage the monthly payments, because if you do that, you're going to end up just working for the rest of your life and just to pay bills, when you should be working to be able to enjoy life, and then you pay your bills with your extra money. The other thing is using credit to buy clothes and jewelry and stuff like that. The reason why I'm really against that, unless you're going to pay it off at the end of the month, and we're going to get into those strategies, is because you're ending up paying more for the same thing. If you use your credit card, and you see the department stores are big with this right now, and that's because they make a killing by doing this, because you go there, you get a shirt, shirts, some stuff, $200 worth of stuff, and they say, hey, we'll knock off $100 if you get this credit card right now, because they know that if you don't make that $100 payment and pay it off that month, look at the interest rate. It's going to be about 18% to 25%. They're going to make that money back. And then if you don't pay it off after 2 months, they've made the $100 that they gave you. And now they're making profit. And then you'll probably go back in the store and use that card again. So be very careful about the types of things that you utilize your credit cards to use, because you can end up actually paying more. And when you wake up and you're like, where is all my money going every month? These are the different places that your money is going every month. The next thing, number 3, that I wish I would have knew when I was 18 years old, was that I should have looked at legal ways to manipulate my credit reports, my credit scores. And I said, quote, legal. One of the things that I've been able to do for my children and other people have been able to do, and it is also available and it's been around for years, is using authorized user trade lines or authorized user accounts added to your individual credit reports, and it will boost up your scores. If you let it ride for a period of time, you can also get approved for your own credit card. You can get approved for a lower interest rate on a loan, a lower interest rate credit card, all types of things. You're basically piggybacking, which is the term that they use, off of someone else's good payment history. It's not illegal to do it. It's illegal to utilize it to do things that are, illegal. Like you can go out there and get credit, and then you're not going to pay that credit back. But if you're getting it for yourself, people do this all the time for their children, and I wish that I had looked at that. And then also, in today's world, but I'm going to talk about what I could have done when I was 18 years old back in 1988. But in today's world, you can do things like rent reporting. You can report the app payments that you make. There's different products that are out there with the different bureaus, TransUnion, Equifax, Experian, where you can actually utilize things that you're paying payments on that are not being reported, and they will report it and allow your scores to be able to move up. But these are some, now, from back in the past, something that I didn't know that I had actually did before they started all of this rent reporting and boost and all that stuff, is that you can actually write to the bureaus and tell them that a company that could be reporting is not reporting. Now, some of them will not be able to report because they're not a member, but this is something that a lot of people don't know. And I had learned this actually with the cell phone companies. Have you noticed that if you don't pay your cell phone bill, the cell phone they'll put that payment that you either missed on there, or they will put the information on your credit report that you owe them money. And now this was if you have a contract, and this was back when they had the contracts. They don't even do contracts anymore. But this was something that I did notice and I had utilized, is that you can actually write to them and say, you should be reporting to my credit to my credit reports, my payment history. And you can also write to the bureaus to have them submit information to them about becoming a member. You wouldn't say it that way, but this is what the bureaus would do, is that they would get your information saying that it is not being reported. They would send a letter to that company saying that we have a letter here from one of your clients that you're not reporting, and we notice that you're not a member. Would you like to become a member so you can report your customers' payment history on their credit reports? And then the companies would decide to do it. But also with the cell phone companies, they were already members. They were just only wanting to report if you didn't pay them. They didn't want to report that you did pay them, even though they utilized your credit to get you into that contract. And so that was one way that I did get my Verizon bill. Well, it was actually Sprint back then, to report to my credit reports. And then also Verizon ended up doing it, but now they don't even do contracts. And so it's on my credit reports, but it doesn't do any updating or anything. Number 4, this is something that's very important, and I see this happen a lot with clients when they are getting out of debt. Like they had that mindset, I want to get out of debt, I want to be able to move forward, I want to save my money. And what they end up doing is they end up closing accounts. You should don't close the accounts if they want to close it because of inactivity. Let the credit card provider close your account, but you don't want to close it because if you close it, your scores are going to drop. And here's the reasons why it's going to drop is because when you have an open account, such as a credit card, you had that available credit history. And remember, you need to keep that credit utilization on the statement day below at least 25 to 35% max is what you want to have as a carryover balance on your if you even carry over balance max, because if you have more than that, they're going to say that you're overutilizing. They're going to, if you can look on your credit monitoring and see that what else say like a percentage, you have this percent of utilization or this percent, and you want to watch out for that. Now, something that you want to be also careful of is that you got to know when the statement date is going to be transmitted to the bureaus. You need to call your credit card provider and say, when is the information each month for my payments transmitted to the bureaus? You got to get that information, or you're going to have to try to figure it out yourself, because you could pay off your credit cards every month and then you will see that it was reported when you had the balance before your payment. So that's why, and so it's called a statement date. When are they going to submit the reporting for your statement? You may get the statement at a later date, but they've already submitted the information before your payment was sent. Your statement was sent to you that everything was due. So be very careful of that. Now with the online portals, you're able to kind of see how that works a little bit better. But never close the accounts unless you just absolutely want to. You don't want to deal with that provider anymore. You can do that, but just know that your scores are going to go down. All right, number 5, which is like a very important one, especially with the way that our economy is right now, and the different opportunities and the different things that these credit card companies provide, is your credit could be a bridge to cash flow. You see people utilizing credit to buy cars, to rent out cars on Turo, which I'm not any professional on that, but you can get a car to do Uber with. You can utilize your credit to deliver Amazon stuff with. You can, to get a van, a good, decent cargo type van to be able to do that. So you're utilizing your credit as a bridge to cash flow. Yeah, you might have the payments, but you're going to be able to utilize that for cash flow. Other ways that you utilize credit cards with, and this is something that I utilize my American Express accounts with, where, like for example, with my building here, we had to pay over I think it was like $55,000 for the new heating system. Like we had to get everything replaced when we had purchased the building. And first thing my wife and I said was, "Do you take American Express?" And they were like, "Yeah, we take American Express." We were like, "Okay, well, how much do you need down, and then we'll do the rest when we finish." And they were like, "Well, you just got to put," I think it was like at that time, like 15,000 down, and then once everything's in, tested and finished up, you pay the remaining amount. Well, we had utilized the American Express for that. That bridged us a whole month. We were able to just continue taking in cash flow from that business, and then just set it aside. We didn't blow the money or something. We just let it that amount plus more sit in the account, which gave us another added benefit, which was utilized for other things, such as when we had purchased a home, was that we had high balances in our checking account. And so, when you go through underwriting, they say, well, we'd like to see your bank statements, see what, how you're managing your account. And they look at that and they say, well, you hold a large amount in your checking account. So that, that perception brings you up to someone that they should loan to. And then obviously the credit scores, completed that also. But we ended up, another added benefit was that the points, which was something that I didn't really get into, but right now I'm very happy with the point system, because we utilize them for so many things. I spend for my advertising, I spend for any products or services that I need to get. I'll just put it on that card. Each year they break down the different things so you know how to file it on your taxes. And then we get those points back. Like we've gotten in some months as much as $2,000 in points where we could have cashed it in, where we cashed it in and got the money. But something that I've learned even more now is that we, rather than cashing in the points for dollars, we're actually looking at the different things that we buy with our money, you know, like that we would go and pay cash or use our debit cards with, or even a credit card, like if we were going to a clothing store. What are those companies? Are they on the list of where you can get points? Because something that we notice is that like here's an example for my wife. She's just got me a bookshelf that I'm going to be setting up here in the office, and she bought that 100% with the points from the American Express card. So if I would have took I think the bookshelf is like $450. I think what she said it was. But if we would have took the points in cash, we would have only got half of that, $200. But because we used it in points to buy something, we had got, you know, I think it was like $400 or $425. Like paid, dang near paid everything for that bookshelf. So this, you know, utilizing the credit to bridge to cash flow is a very, very good strategy, and also a bridge to getting points and having a high balance checking account where you have a high average. All of that stuff, when you think about it, it will work very good in your favor, being able to move forward with your financial life. All right, if you need help with your credit, please visit us at thecreditrepairshop.com. Watch the video, What Makes Us Different, so you can see my 8-point validation process and my 2-phase settlement process. If you have debt collectors coming after you, grab my 3-pack of letters. Please make a donation on that, because it will literally stop debt collectors. It will stop frustration that you'll have. It will put them on notice that you're not just going to sit back and let them do anything to you. It can save you time, money, frustration. It's well worth the donation. If you need your credit reports and scores, go to the website the3scores.com. You can get your TransUnion, Equifax, Experian credit reports, and all 3 scores. If you want your FICO score, we have a link to where you can get your FICO score, so you can see what car dealers see what mortgage companies see, insurance companies, and credit card companies. You will know if you can get approved, because you'll see the exact information and the numbers that they will see, and it gives you a breakdown of the different FICO systems, where it'll say, hey, this FICO is used for credit cards, this FICO is used for automobile loans. So thank you for your time. Please subscribe to the channel, ask your questions, post your comments. I've been in there answering as many as I could. If I missed you, I apologize. I'll get back around to them. Thank you for your time. This is Stephen A. Williams, president and founder of thecreditrepairshop.com.